Hello, this is Coach Ogi right here. So today I want to talk about one stock to avoid right now if you don't want to lose money as a trader. Trading and investing, like I always say, are not the same. When you are buying a stock, it's important you put a definition to that particular stock, which is whether you are buying for trading or for investing. And why that is important is because, when your stock is going up or down, the reason you bought them will play a larger role. Do you understand? A larger role, I mean, on whether you should sell them at that point or probably continue to hold them. For instance, when you buy a stock for investing and the stock keeps going up, there's no need for you to sell because you plan to hold them for at least 1 year, 2 years, 3 years, 5 years or more. But when you bought for trading, at some point, there may be need for you to take profit. But remember again, there are also some stocks that would go down. Now, if you had bought that stock for trading, then you should be worried because such kind of stock can magnify or maybe can probably pull your portfolio down. Now, if you bought such kind of stock for investing, you might also not worry. So today, I want to talk about one stock you should avoid for trading. Meaning, if you had bought them or you're looking at that stock or you're thinking that, oh, this stock is down and it's time for me to quickly buy, you might probably be trying to catch a falling knife. So I want to teach you how to avoid a falling knife in the market. Now, before I delve into that particular stock, remember this video I posted, three Nigerian stocks I bought for 100% profit in 3 to 6 months, and then where I talked about three flour mill stocks that I plan to double down on, which were the Honeywell, flour mill, Honeywell, flour mill, and flour mill of Nigeria, which has been delisted, and the final one was Northern Nigerian flour mill. So remember then, Northern Nigerian flour mill was selling for I think 50 something naira at then. Today, Northern Nigerian flour mill has stopped almost 70 something to 80 naira. I think sorry, it tops 80 naira, 60 kobo as at the time I posted this particular video. So that means the stock had even rallied more from that 15 naira price after it broke out. So the stock was selling around this region, and then you can see it has probably appreciated further. So that is the three minimum that I've made of 100% on the three flour stock that I plan to double down on since 2024. So that's just a confirmation of what I shared right here. If you miss this video, go and watch this video. So much to learn right here. It's not really about the stock recommendation, but knowing why I bought that stock also matters. So that is for flour stock. Now, today's video will focus on one stock you should avoid. Now, why I had to share this video is because I know a lot of people would want to start jumping in, especially those smart ones that are always looking at, oh, PE ratio is down, it's below industrial average, it's below this, and then I think the stock is oversold, oh, the stock is cheap. Please, a stock can be cheap, and tomorrow it may even be cheaper. Don't try to catch a falling knife. Except you are buying for investing. And what is investing? You plan to hold for at least 3 years, 4 years, 5 years or more. So that even if the stock dips today, you think, which is not even assured, that the price might actually go back tomorrow. But if you are buying for trading, especially for someone like me, you must pay attention to demand and supply in the market. Demand and supply is key. So right now, I see a lot of supply on that stock right now. There's still supply, and supply is still in the market. So meaning if you rush into buy, you might be at risk. Now, it doesn't mean that I can tell you exactly when the stock will pick up, even though I have a model that tells me when the stock is recovering. The stock is not even in any way close to my buy recommendation right now. What is that stock? That particular stock is Julius Berger. Please do not get close to this company for now if you're trading. Yes, the one saying it, and I'm going to say it again. Let me see if I can find that stock symbol. All right, this is it here. Do not get close to this stock for now, and I'll share my reasons. Now, every stock in the market, whether it's Nigerian market, US market, they go through 4 stages. This is 4 stages. Now, that stages is very key. It's important you know the stage that a stock is before you buy that stock. Now, the first stage is the accumulation stage. The accumulation stage, like you see on Julius Berger, we call it range, where the stock trade within range. At that point, from the word accumulation, people are buying, investors are accumulating. So you see that stock move in range. It's not going up, it's not coming down, it's just moving in range. Now, when a stock breaks out of accumulation stage to the upside, it moves from accumulation into an advanced stage. So you can see Julius Berger has moved into an advanced stage, which started around August last year. I remember very well, I even have a YouTube video on Julius Berger where I talk about how to buy high and sell higher. If you go through my YouTube channel, you should be able to find that video. I discussed Julius Berger stock extensively, and that stock had rallied from that region. So let me see if I can find that video on my YouTube channel, how to buy high and sell higher. This is it right here. How I buy Nigerian stocks high and sell higher. That was 8 months ago. And it was that stock that I talked about right here. You can go watch this video. So, and the stock had moved from that region. In short, I even mentioned the fact that the stock should sell above 100 naira based on their earnings. And the stock did blast above 100 to reach a high of almost 168 naira. So you can see Julius stock went into advanced stage. And once a stock gets to the top, by the time it starts finding resistance, that at that point you see that there's so much bias in the market, and then eventually you get to a point where these buyers are now turning to sellers, meaning that some of them wants to take profit because they feel that they've seen sizable gain, or maybe some might even consider the stock a lot more expensive. Nobody is willing to pay above 162 again on that stock. What happened? The stock will now move into what we call a distribution stage. Within that distribution stage, that stock will start moving in ranges again, just like we saw on accumulation stage. So at distribution stage, you see Julius Berger move in range. You can see right here, up, down, up, down. So at this point, Julius Berger is in the distribution stage. And distribution stage happens when it's close to a key level. You can see the key level I marked on Julius Berger. Touched this key level the first time, came back, touched again, dropped again. So my likely see the stock will be touch and then start moving down. So that's like an M sign, M pattern. So when you see an M pattern form at a resistance level, it's a bearish sign. So right here, I am very concerned because the Berger is at distribution stage. Nobody is willing to pay at price above 170 or 72, which is the high, 172.5 again. So that means buyers are already considering or seeing the stock as being expensive at 172. So right now we're seeing a drop. And since then, when the topped a high in November last year, the stock had dropped from 172 down to 128. Meaning nobody's willing to buy. So now the question is Julius Berger stock a buy at this point? Is this something we want to consider? Is it something we want to say, oh, let's buy the stock right now, it has dropped, or it's cheap, or it's selling at the bottom of the market? Remember, when I am trading stock, I pay attention to key level. I don't trade stocks that are downside risk is very, very high. My downside risk on Julius Berger right now is extremely high. I would rather pick Julius Berger up around 80 or 72 if it drops to this key level rather than buying it right here. And remember, the stock is even close to a major resistance. So why would you want to buy a stock when it's close to a resistance, when it has just bounced off to a key resistance twice, which means that at this point, there's a lot of sell order right here. So you might buy it to go up a little bit, and then when it gets to this point, people will sell because the stock had been going through an advanced stage since August into October or November 2024. That's important. Now, if you look at this now, this looks like Jamaica is most likely going to drop further into 80, 90. Now, I'm not saying that is what will happen, but from my analysis and check, this looks like a stock I should avoid for now, because if you go in, you might be burnt. Be very careful. For those that have joined my ETC section, I even went deeper to show them the technical setup, some pattern that made this stock a no-go area for me, and they saw it. Like this stock is showing the opposite of my buy signal. The same signal I watch for buy, that is what Julius Berger is showing at the opposite direction, meaning it's a sell right now. If this stock is going to be a buy, I will definitely alert everybody in the private community, and then I will also tell them why I think the stock is a buy. Now, another reason why I also think this stock is also a sell is that the fundamentals for me might be deceitful to those that don't understand how to trade stock. Yes, let's look at the fundamentals of Julius Berger, and then let me explain that. Now, let's look at the 12-month results. Now, 2024 against 2023, January to December. Now you see that the revenue went from 446 to 586, which was okay. Gross profit in dropped from 72 billion down to 70, a dip. And then look at operating profit 10.9 to 12, and then profit before tax from 22.2 to 29. Profit after tax is from 12.7 to 14. So you might say, oh, is this not impressive? This is a very good result. Oh, I'm going to buy JBerger right now. Oh, it delivered impressive return. 2024 result was higher than 2023 and stock is down. Let me quickly buy at the bottom before it picks up. No, you might be missing something. Now, one thing I don't like about annual results is that annual results will not give you the full picture, will not cover what is happening currently. So the question is, what is the recent result like? That's why I pay attention to the quarterly results of the company. Look at the quarterly results. You will then see that there's actually an issue that is being hidden inside. So inside these 12 months, there is a problem that you're not seeing. And here's it. Now look at the 3 month results 2024. That's October to December 2024 against October, December 2023. So you see revenue went up from 112 to 161. So let me expand this. All right. So revenue increased from 112 to 161. Gross profit from 11.6 to 12.7. Now look at operating profits. Operating profits turned negative. Can you see 3 months? So that means the latest quarterly results was not impressive. From 3.9 billion in Q4, sorry, 2023 to a negative to minus 1.9. Can you see, which was a loss right now? And then you see that profit before tax dropped from 7.2 in 2023, that's Q4 2023, to 3.3 in Q4 2024. That means the fourth quarter result, that's the Q4 result, was not impressive. The bottom line, profit after tax from 3.7 in Q4 2023 down to 2.6. Can you see here? And then eventually you look at the EPS. EPS dropped from 2.3 to 1.56. And if you ask me, between EPS, sales, and profit, which of them actually moves this stock market more? Which of them actually drives stock price? It is the EPS. Why? Because the EPS will tell you what is distributable to shareholders. How much is each shareholder going home with? As a shareholder, you are interested in what is due to you. Do you understand? If this company is to distribute its profits, how much am I going home with? That is very important. So it is not just the profit the company made, it is what you and I are going home with, which is the fact that this year, this quarter, you can see a drop from 2.3. So despite an increase from 7.9 to 9.7, this is a sign that there's a problem. So you can see that inside this, you will see 7.9 increase to 9.2. But if you probe the most recent quarter, there's actually a dip from 2.3 down to 1.5, which is not okay, which is not impressive. And if I go with my ETF model of buying stock or investing in stock or trading stock, number one, the company must pass through or benefit from economic events. Now, just whether is it benefiting from economic events? Yes, you can see right here, at least construction project, even though it had some kind of loggerheads with the federal government. I don't know if they've resolved the whole issue, but I'm sure they will resolve it. I've said that before. Now, the other part, which is technical, the technical here is not telling me it's a buy. The technical here is letting me understand that sellers are still in charge of the market. There's a sell volume right here. In technical analysis, I am looking for a stock that is down. I'm looking for an oversold stock with limited downside risk and then huge upside potential. I'm not looking for a stock with huge downside risk. So Julius Berger has a huge downside risk. Now, I'm also seeing some minor points around this region. You can see here, and if I want to mark this here, you can see right here, these are the minor key level, right? So meaning that even if Julius Berger doesn't drop to 79.80, at least I know of 97 as a major point to start considering that stock. So right now, I see the stock as being expensive. I see the stock as no-go area. The major reason why I am not buying this stock is because demand and supply. The sellers are largely in charge of the market. Sell volume is huge right now. And if you go in, you might probably lose money. Now, this is just my own opinion. I may be wrong in my analysis. So whatever I share, kindly do your due diligence. But I just shared my own opinion about Julius Berger. It does not pass through my ETF checklist. The time Julius Berger passed through my ETF checklist was when it was selling for around 29, 30 naira, and the stock has moved from then to reach almost one something. So let the sellers leave the market. Let the sellers dump as much volume as they want in the market, so that when it's time for you to enter, you can enter at the bottom of the market. So for now, I think it's a seller's market, and I think you should avoid this stock so that you don't lose money. Like I said, it's just my own opinion. Tomorrow the stock can be a top gainer. Tomorrow the stock can blast higher and even blast above 172. And remember, I am not in this market to be right. I am in this market to make money. And if my strategy does not tell me to buy, I am not going to buy. So this is just my opinion on Julius Berger stock right now. If you have an contrary opinion, have a contrary opinion as a trader, please, not as an investor. I might be wrong as an investor. And remember, two people might be sharing contrary opinion about the stock, and both of them will be right. What you should pay attention to is their risk profile. So for me, as a trader on this stock, I am not buying. For you as an investor, it might look like a good buy because the price has dropped. But then if you look at it, the value seems to be high. For any smart person who is even investing in the stock, you likely want to wait for the stock to drop further, considering the Q4 result, which is not even impressive. So that is why I am not buying Julius Berger. So if this is the first time you're watching my video, kindly hit the subscription button and turn on the notification bell so that when we have new stock, we will notify you. Remember, we run glowfolio.com platform. So if you are looking for new stocks to buy, I always post them on the Glowfolio platform. So if you go to Glowfolio platform, just click on login right here. You see, you click on login, and then you see this is where, if you are logged in already. Now, if you're not logged in, you want to look at the recent recommendations. This is where I post all my stock recommendations. Like I just posted this February 13th. That's like 4 days ago. And this stock is still within the buy range. So this particular stock is still within the buy range. This stock has been beaten down like extremely well. Unlike this particular Julius Berger that is still up, this recent recommendation had been beaten down. And then from my analysis and every check, this is a stock that I think might probably pick up in 2025. And it's a stock that I think would also lead the industry recovery in 2025. So if you want to get on board of this stock, kindly subscribe to Glowfolio platform and access this stock right now. These are opportunities waiting for you in the market. You don't have to probably force yourself to go buy a stock that is at the bottom. There is a difference between good buy and good buy. Now, one is good buy. Good buy means, oh, it's good to buy. Go and get them. This is an example of a good buy in the market. There is also another one where you say goodbye. Goodbye means bye-bye, like I don't want you again. Nice doing business with you. This is it right here. So you have a choice either to buy a good buy stock or you buy a good buy stock in the market. So thank you so much, and I hope to post more videos on how to invest and trade in Nigerian stock markets.